The Federal Reserve says it will reduce its $85 billion a month economic stimulus beginning in January.
Our modest reduction in the pace of asset purchases reflects the committee's belief that progress towards its economic objectives will be sustained. If the incoming data broadly support the committee's outlook for employment and inflation, we will likely reduce the pace of securities purchases in further measured steps at future meetings.
The pullback means the Fed will reduce its purchases of mortgage bonds and Treasury bonds by $5 billion each.
I think the $10 billion initial taper was a good number. It's more symbolic, perhaps, and that it is substantive. But I think the Fed wanted to signal to the market that they're beginning to unwind the program, but they're still going to be data dependent.
The unemployment rate will be the biggest data point the Fed will use to help shape policy. It expects a dip below 6.5%, a threshold for further pullbacks next year. Economists say the decision shows the central bank now has faith in the economy 6 years after the Great Recession struck.
It certainly is a vote of confidence that the Fed has for the economic recovery. They have faith that we will continue to improve, and I think they have good reason. The private sector has held up rather well despite all these fiscal shocks.
Wall Street took the move as a positive sign as well. Stocks soared nearly 300 points on the news. Warren Levinson, Associated Press, New York.